National Association of Realtors 2024 data says the median down payment for first-time home buyers is 9%. 9, not 20. And you don't even need that. Whether you're ready now or just starting your journey, we're here to walk with you every step of the way. What's up, Azcension families? This is Des Losberg, and this is The Purchase Path, the show that hands you the keys to homeownership one busted myth at a time. Now, you've heard the big one. You might even believe it. That quote, you don't even think about buying a house because you don't have 20% saved up. Well, tonight we're lighting that advice on fire. And by the end of this episode, you're going to own 3 specific truths. Truth number 1, what the real minimum down payments for FHA, VA, USDA, and today's 3% conventional loan programs are. Truth number 2, how state and local down payment assistance programs like Arizona's Home Plus program can hand you 3 to 5% in free or forgivable cash. And truth number 3, the 5 creative strategies that real buyers use to get keys years sooner than the 20% crowd. So grab your favorite pen, open that fresh note, and let's punch a hole straight through myth number 2. So where did the 20% idea come from? Yeah, my grandpa bought his first house in 1974. Get off my lawn. And back then, virtually every mortgage was plain vanilla and a conventional loan. There was no internet. There was no fintech. No widely used federally backed programs. If you didn't have 20%, you paid sky-high private mortgage insurance, even if a bank would lend to you at all. Well, fast forward half a century later, and the National Association of Realtors 2024 data says the median down payment for first-time home buyers is 9%. 9, not 20. And you don't even need that. So why does the 20% rule story still survive to this day? Well, from my perspective, after being in the lending industry for 22 years, reason number 1, it's all about love and fear. Our parents teach us. They want us to be safe. They repeat what they heard. Reason number 2, it's old math. You hear mortgage insurance and it was pricey. It was permanent. It adds to your payment. It doesn't make sense. While those are good intentions, it's all outdated data, and it's time to update it. So let's talk about today's minimums. And there's 4 specific big doors that you can get a mortgage with without the 20% requirement. So think of the mortgage world as 4 big doors. So door number 1 is FHA, and door number 2, VA. Door number 3 is USDA, and door number 4 is the conventional Home Ready or Home Possible, Home Plus programs out there. And there's also a little bonus door called Local Down Payment Assistance. So let's talk about the first door, FHA. So FHA requires just 3.5% down if you have a 580 FICO score or higher. On a $300,000 home, that's $10,500, not $60,000. And scores from 500 to 579 can still qualify with just 10% down. Your upfront mortgage insurance premium is 1.75%, and that is financed into the loan. It's not paid out of your pocket. Here's the best part. With FHA Home Plus programs, you can get that down payment covered with either a second lien, a grant program, or a nonprofit who donates to the purchase. Now, with FHA financing, you do have monthly mortgage insurance, but overall the interest rates, because they are insured by HUD, you are getting a lower interest rate. So while you might be able to get 3% down with conventional options or no down payment programs and avoid the mortgage insurance on there, you can still get FHA financing with mortgage insurance and have a lower payment overall because the interest rates are that much lower. Now let's open door number 2 for our loved veterans. Now, the VA, the Department of Veteran Affairs, sets no official minimum FICO score. Now, most VA lenders choose a 620, and some credit unions even go lower. but most private lenders can go below 600, but there is no requirement. And with the VA financing, there is zero down payment, nothing. The veteran does not have to come up with anything at all. And the best part is there's no monthly mortgage insurance. The VA covers it and they insure that mortgage. It's essentially a conventional rate with government interest rates. So there is a one-time funding fee, but if you have a disability as a veteran, you may get that waived as well if you receive a monthly distribution or you're determined to have a 10% or more disability. Now let's move on to USDA financing. So if you go outside the city lights, there are zero down payment options for you. The USDA, the U.S. Department of Agriculture, their rural department loans also mean zero down. Now, they cover many outer ring suburbs, not just farm country, but just outside city limits. A 640 score gets you an instant automated approval or USDA computer approval, and scores in the low 600s can pass a manual underwrite. So they take a human underwriter, they place eyes on your file, and if you have compensating factors, they can manually approve that loan. So instead of PMI, you pay a small annual funding fee or insurance fee, and you qualify for 100% down. The final option is conventional, the conventional 3% down option. Home Plus, Home Ready, Home Possible, Fannie Mae's, and Freddie Mac's programs with just 3% down. There's even a 1% down program where you get a grant for the remaining 2%, but it's all the same. The lender is just contributing to that 3%. They cap your income about 80% of the area median income. So talk to your loan officer or lender, or you can go online and find out what the median income is for your area. And ultimately, they honor you by giving you a discounted rate on your insurance. So your private mortgage insurance is discounted. You don't have to pay as much on a monthly basis, and you don't get what they call LLPAs, which are loan level price adjustments for lower FICO scores. So if you meet the requirements, your interest rate does not get hit and does not get increased because you have a lower FICO score if you meet those requirements. Now, the gift funds and down payment assistance are fully allowed on all these programs. And so if you combo that with door number 5, our bonus door, local down payment assistance, you can essentially buy a home for no money out of your pocket. That's right. You don't have to come up with a down payment. You don't have to come up with your closing costs. You can structure the loan to get a credit from either the lender, the seller, a grant, all of it. And you just need to get a seller to consider those type of loan programs. Now, they do take a little bit more work. They do take a little bit more time, and not as many people know about them. But if you're willing to work, if you find a seller willing to work with you to honor those types of loan programs, you can get into a home with no money out of your pocket. At Azcension Homes, we love that. We lean into those products and those programs, talk to other builders as well, but existing homes that are sitting, sellers are more inclined to entertain those type of loans. Now in Arizona, the Home Plus program offers up to 5% of the loan amount as a forgivable second lien. So if you hold the loan for a certain period of time, that lien will be paid off and disappear. It'll fall off. And most states have a similar program, but we're focused on Arizona. But if you're listening to this and you're nationwide, a lot of municipalities have different grant programs. So just Google your state, name Plus down payment assistance to find yours, and you should be able to find a local grant program. So pause, notice, in any of these examples, any of these doors, I've yet to say 20% down. That's right. I've yet to say greater than 3.5% down. We're talking about zero down. We're talking about 3%, 1%, nothing down. Closing cost credits, seller credits, all of it right now. It's a great time to structure it where you can get in, pay less than what you pay in rent or pay similar to what you pay in rent and buy your home and own your asset with no money out of your pocket. Now, I know what you're thinking, and I know what some realtors and some loan officers will tell you, and I know what mom and dad or Uncle Joe is probably telling you as well. Yeah, but if you don't have 20% down, you're going to pay PMI, private mortgage insurance. So, all right. So if you come to me and say, hey, Des, okay, but PMI is like throwing money away. Well, let's break that down. Let's crunch these numbers and let's poke a hole in that myth. All right, let's take a $325,000 FHA purchase. Now, the monthly mortgage insurance premium is about $175. Now, instead of waiting to save up 20% to avoid purchasing that $325,000 home now, let's say you wait and you want to avoid paying that $175 per month, the time that it would take you to save that money, Arizona home values would have rose 4% every single year. So that's roughly $14,000 in equity in appreciation gain in that same exact house. So yes, you avoid paying $175 a month in mortgage insurance premium, which equates to about $2,100 a year in private mortgage insurance. Check my math on that. But if you did go ahead and absorb the monthly mortgage payment every single month, you would gain $14,000 in equity growth, plus your principal pay down. It's basically a 6-to-1 trade-off. So tell me which one makes more sense for you now. Save up and take the time to get 20% down and sit on the sidelines while everyone else is building equity, or get in, pay the $175 a month and build your equity from day one. And remember, paying mortgage insurance is just a stepping stone. It's not a life sentence. You can get in, build your equity, pay the principal down, and refinance into a conventional loan when you hit that 20% equity. And then you drop the mortgage insurance entirely. All right, now let's go ahead and transition into 5 different ways to cover the down payment faster. All right, strategy number 1, go to your local state or municipality for down payment assistance. Now, just go to your local city hall or council and ask them, do they have any down payment assistance programs? And a lot of them do. You can also check out Home Plus, Cal HFA. There are other different programs out there. I did a quick Google search and there was 31 different programs in just our local Arizona area on different programs that are available to first-time home buyers, first responders, veterans, and the like. Now let's talk about strategy number 2, gift funds from family, friends, and employers. So on FHA, VA, and USDA, you can gift 100% of the down payment. So as long as it's not repayable and you have a gift letter, you can receive funds from friends, family, and even your employer. All it takes is a letter and a proof of transfer, and you can have your down payment now. So ask mom and dad, ask Grandma Jane, ask Uncle Bob. They're more than happy to help you out. A lot of the times over my 22 years, the parents or family members give their inheritance a little bit early to allow their children or family member to buy their home. And eventually they refinance out, lower their payment, and then behind the scenes, you could do whatever you'd like on a repayment, whether that's promising to show up for mom's turkey every single Thanksgiving as a repayment, or if it's some other service that you provide for that family member. Whatever it is supposed to be forgivable and non-repayable, but whatever you do behind the scenes is between you. Strategy number 3, let's talk about seller concessions. Now, the seller can't pay for your down payment. That is a non-arm's length transaction, or you have to keep it a arm's length transaction. So the seller obviously can't pay your down payment on your behalf. It has to come from your own pocket. But what they can do is provide concessions. On FHA, a seller can provide up to 6% of the price towards your closing costs, and that frees up your cash to go towards your down payment. So work with a seller, a builder, an existing home seller who's willing to give you credit to pay for your closing costs. And that way you only have to come up with your small down payment. Now, strategy number 4, a 401k loan or a Roth IRA loan. Now, you can withdraw on these accounts. Now, talk to your CPA or your financial advisor. They may advise against it, but you can borrow against it and repay yourself, and it'll be tax-free. Again, trust but verify, but you can go out and ask them. But you can pull up to 10 grand of Roth earnings penalty free as long as you're a first time home buyer. So if you have a retirement account or other assets, talk to your account manager and see if there's a way you can access those funds without paying a tax penalty. Strategy number 5, a builder or lender credit. So depending on who you work with, now we have our preferred lender at Edwards Financial, and you can actually structure your loan where you would get a lender credit back. Now, the interest rate might be structured a little bit different where you get a larger credit back from them, but those can be used towards your purchase as well. Builder credits as well. You can receive builder credits, which they're essentially the seller also, but there's so many different creative ways that you can get a credit from the seller, the lender, the builder, and all these different grant programs so you can get your closing costs paid for, down payment paid for. It takes a little bit of work. It takes a little bit of effort, but I promise you they are out there. Okay, so now let's talk about real life stories on loans I did over my last 22 years. It's a story about a borrower, Anna and Jordan. Now they had a price of $295,000. They saved up $7,800. Now they used FHA, and so they only had to come up with 3.5% down, and they used an $11,000 Home Plus grant program. The builder kicked in $5,000 for closing. So the total amount they came in at closing was a net of $800. That's right. They bought a $295,000 home, and they were able to come to the closing table with $800. The second story is Sergeant Melendez. The home price was $360,000, I believe, and he brought in $5,000 to closing with a VA zero down loan program. However, the seller kicked in after inspections $5,000 towards their closing costs for repairs and everything that needed to be done, because VA does have requirements of minimum standards for the home. So the seller paid everything, all the closing costs. The VA funding fee was waived. He kept every single dollar that he saved. He paid no mortgage insurance, and he was able to buy a home with no money out of his pocket. Those are two real life examples of first-time home buyers being able to come in with $800 down and then zero down. And these are around $300,000 purchases. Now, I know that was a lot of information, and we covered it all in the show notes. We'll talk about all these different programs, but you can always email us or just reach out to us, go into our community, join in our online communities, and we'll be able to help you out, guide you in there as well. But you can actually go in and email us at team@ascensionhomes.com. That's AZCENSION homes.com. So team@ascensionhomes.com. And we're more than happy to send you a first-time home buyer and down payment assistance grant program guidebook. So just reach out to us via email, join our online community, or continuing follow this podcast. So let's review everything that we talked about. So step 1, your action plan is to identify your door, whether it's VA, USDA, FHA, or the conventional 3 or 1% down programs. Step 2, you're going to Google search or search your local municipality and cities down payment and grant programs. You're going to see what's out there. And you're going to step 3, you're going to run a simple formula. We will look at what it is that you'll need to come in with a down payment, whether it's 3%, 1%, 3.5%, and you're going to figure out the plan. So if you figure out you need $7,000 as a down payment, maybe you can go out to a family member or a friend or your employer to have them cover that. Perhaps you have a small retirement account that you can tap into to cover that as well. Or maybe you could structure with the right realtor, the right lending partner, and the right builder. You could structure a home loan and purchase where you can get all of that covered. The last thing is pick your lender. We have preferred lenders here at Azcension Homes, and we can get you connected, but interview at least 2 lenders, compare the seller credit limits and their buy down options, and then open a dedicated home fund account so you can at least start putting some money in there if you need. Again, you don't necessarily need it to buy a home, but it'd be nice to go ahead and know that number and start saving towards that goal. So if you do these 5 steps in 30 days, that someday becomes a real closing day. So again, I hope we punched a hole in this second myth of I need 20% down. You don't even need 10% down. Remember, FHA is 3.5%, VA and USDA, you need 0. We have conventional Home Ready, Home Possible grant programs to take your 3% to 1% to no down payment. Again, my name is Des Losberg. I retired from the lending industry after 22 years. And so I'm here educating you. And if you ever want to look at all your options, reach out. We'll get you connected with our preferred lending partners. And if you're looking for a home down the road, we cater our homes at Azcension Homes for home buyers like you. Now, looking forward to episode number 3 of Busting Myth number 3. We are looking forward to punching a hole in that last myth. And that is my income is not stable or I can't document it. And I am going to share with you in the next episode that yes, there are programs where you don't need traditional W-2 or pay stub income, and that there's alternative options as well as options to not even having to document your income. So again, it's a pleasure to be here with you. And remember, the sky's not your limit. It's our baseline, and we'll see you next week on the purchase path. The cost of living has pushed too many families out of the communities they love. They work hard, but still can't afford enough space. Rent keeps rising and homeownership feels like a distant dream. That's where the purchase path comes in. I'm Des Losberg, founder of Azcension Homes, and I retired after 22 years in the lending industry after I kept seeing the same pattern. Good, hardworking families getting locked out, not because they didn't deserve a home, but because no one ever showed them a real way forward. This podcast exists to change that. Here you'll learn about real paths to ownership like zero down financing options, down payment grants, lease to own programs, and financing options that are actually designed for families like yours. This isn't about fluffy dreams or get rich quick advice. It's about clarity, options, strategy. So whether you're relocating, renting, or just tired of waiting, you'll get the tools and the truth to move forward one step at a time. Follow the purchase path now on Spotify, Apple, or wherever you listen and start your journey with Azcension Homes. Your path, your purchase, your time.